Today is going to be an update on my managed portfolio. Hi, this is Mosh. Today I'm going to go through exactly what a managed portfolio is, who a managed portfolio is for, why you should use InvestEngine and who they are. I'm going to go through my managed portfolio, give an update and show you guys the results, and the results are surprising.
And what strategy would that be?
Never stop surprising them.
And lastly, how to get £50 for free. So definitely make sure you watch to the end. First of all, a managed portfolio is done by professionals. They will invest your money for you and they will do something called rebalancing, which I'll talk about later. If you're someone that doesn't have time for investing or doesn't know nothing about investing or how to do it, which stock to buy, this is for you. For me, when I buy stocks, I spend a lot of time researching, doing the fundamental analysis and the technical analysis. That takes a lot of time, and that's for each individual stock. So this is ideal for people that know nothing about the stock market, nothing about stocks, but want to get into investing. Normally, managed portfolios are used by the ultra rich.
But rich people don't buy penny stocks.
But now with InvestEngine, it's available for everyone. Why am I using InvestEngine? I actually get a lot of companies contact me to do collaborations, to do partnerships, but I'm very careful and wary of who I sign up with and who I work with. In the investing world, you have a lot of dodgy businesses and a lot of dodgy people.
Well, she's a wee bit dodgy.
So you have to be careful. When I first got the email, it sounded interesting, so I started researching the company. And I actually set up a meeting with the managing director and the head of marketing with InvestEngine to find out a bit more about the company and ask specific questions, which I'll cover at the end of the video. Why do I like InvestEngine so much? And I use them myself as well. The reason is they have an incredibly low fee for a managed portfolio at 0.25%. That means for every £1,000, their fee is £2.50. So they will do all the work for you. They'll invest that money for you. So you have to do nothing. You sit back and relax. They're also fully regulated by the FCA. The FCA is a financial conduct authority. It's the main body in the UK that regulates a lot of these banks. They're also part of the compensation scheme, so they'll protect your money up to £85,000, just like the UK banks. They also have no fees for depositing and withdrawing money from the account. So it's a really great deal. Another big advantage they have is they do something called rebalancing. The professionals always do this. Rebalancing is when you buy and sell stocks or buy and sell out of a sector. For example, at the start of the year, the tech sector was doing really well, and then it started selling off. People started buying into the cyclical stocks. So that's rebalancing, when you sell and buy in different sectors or different companies. They do all that work for you. I think that's one area that is massively overlooked by your average retail investor. Now, what they do is they invest your money into a broad range of ETFs, exchange traded funds. ETFs are like a basket of shares. The key thing with InvestEngine is they don't try to beat the market. Only 3.5% of mutual funds beat the market. These guys are not a mutual fund. They try and beat a market. That research was done by Morningstar from March 2020 to March 2021. Only 3.75% of mutual funds beat the market. Most fail to beat the market. There's always a risk with investments, but the safest generally are ETFs because you have a big basket of companies. Another advantage is you get paid dividends. So your ETF that they've invested your money into, if they pay dividends, let's say 1, 2, 3%, you'd receive those dividends. If you're one of those people that have left your money in banks, and generally most banks, the maximum they're offering currently is about 1% as a savings rate. The rate of inflation is much higher. So really, if you've left, let's say £1,000 in your bank account and you're getting interest of 1%, but inflation is, let's say 4%, you're losing out 3% every single year. So you're actually losing money by keeping money in the bank accounts. A lot of people struggle to understand that concept. And I think it's really important to understand inflation. I'm going to show you guys my portfolio and the results are surprising. I initially put £100 in there just to see how it will do. I'm going to start putting £50 in a month into this. I use it myself and I really like the business model. You can see the portfolio is up 3.85%. As an investor, you want to think in percentages. So if you had £1 million in there, £1 million, 3.85% of that is a lot. And remember, the best banks are probably offering 1% as a savings rate. And already in a couple of months, I'm up 3.85% and I've done zero work. I just put the £100 in and waited for the returns. Also with InvestEngine, what you can do is you can see what they've actually invested your money into. So remember, you're not doing the investments, they're doing all the investment and that hard work for you. So you can see around 80% of it is in stocks, almost 14% is in bonds, and alternative physical gold and physical silver is roughly around 5%. And you can see the different types of ETFs they put your money into. And remember, these are ETFs, and these are ETFs that are around the world. So for example, I can see Luxor MSCI Japan. So that's a basket of Japanese companies. I can see the Vanguard FTSE 250. So the top 250 companies. I can see the Russell 2000, which is always good. It's the small cap companies. The Europe 600. So as I said, it reduces your risk. That's why the returns aren't crazy returns like 20, 30, 40, 50%, but the returns are modest, but very, very safe. They also do one really cool thing where you can get projections of how you will do. As I said, these are only estimates. So for example, if I put £50 in a month by 2031, if it was very exceptional returns, is 18,000, expected around 9 to 13,000. And on the poor side, 6 to 9,000. The worst case scenario will be under 6,800. And that's at £50 a month. And by 2031, should be a nice sum of money in there for having to do zero work on it. Because I've got a good relationship with InvestEngine, they've actually given me an affiliate link. That means you can get free £50 by using my link below. All you have to do is deposit £100 as a minimum to get that £50 bonus. And remember, if you deposit £100 and get that £50 bonus, you're already up 50% on your investment. One key thing is you have to keep the £100 in there at least for 12 months. Otherwise, you'll have to return that bonus back to them. So just be aware of that. Now, a couple of questions I asked InvestEngine. Why wouldn't someone just put all their money in Vanguard S&P 500? Now, they gave a very good answer, and it actually made me think a lot. The reason is you're actually invested just in the US stock market. Yes, your money is spread out and you've got a basket of shares in that Vanguard ETF. But if something was to happen to the US economy, then that will tank your whole investment. So InvestEngine spread their risk by investing in different countries. Like you saw, I had ETFs in Japan, Europe, all over the world. Another question I had, why wouldn't someone put it into a Vanguard all world fund? Again, the same issue. In that scenario, you are heavily invested in just stocks, in companies, whereas InvestEngine, what they do based on your risk, so they'll give you a questionnaire that you need to fill out, and that will determine how much risk you're willing to take. Using your own risk, they will determine a portfolio for you, and they'll invest in stocks, bonds, and as you saw in my portfolio, I had some in gold and silver as well.
I see a castle of silver and gold.
So it's a broad range. So if something tanks, let's say European stocks tank, the US and the Japanese stocks may keep your portfolio up. So it really spreads your risk. And as I said, it's a great company, and you can see my results that I'm already beating the banks a couple of months into this. Just make sure you go to use my link, and I'll appreciate if you give this video a like.